You're watching the latest weekly CFD overview of the global financial markets. The euro fell to more than 1 week lows against the dollar as investors took profits after its recent rally thanks to acceleration in the eurozone economy. Concerns that the ECB may attempt to talk down the strengthening currency ahead of its monetary policy meeting later this month also weighed on the single European currency. The weaker euro helped support the dollar, which was up 0.17% to 92.2. UK political jitters slightly undermined the continued rise of the British pound since Christmas. Prime Minister Theresa May's authority is jeopardised by rebel ministers, and on Tuesday she dismissed several ministers in an attempt to increase diversity and promote young Conservative MPs, as the GBP USD stood at 1.3511. The Bank of Japan slightly reduced its bond purchases, which reminded investors that it may eventually normalise policy. More specifically, speculation that the Bank of Japan may slow its monetary stimulus strengthened the Japanese yen last week. On Monday, Bitcoin's fall led to a general sell-off in the cryptocurrency market on reports that South Korea's regulators might have started inspecting several banks involved in offering digital currency services. However, the oldest cryptocurrency regained some losses last week after a steep decline in the last days of 2017. Gold prices retreated from last week's 3.5-month highs as the dollar strengthened against the euro and as investors continue to bet on further rate hikes by the Federal Reserve this year. The US Energy Information Administration said in its weekly report that crude oil inventories fell by 7.42 million barrels in the latest reporting week. Market analysts had expected a crude stock draw of 5.15 million barrels. Last Friday, US Baker Hughes said US oil rigs fell by 5 to post a total number of rigs of 742. Oil prices were also supported by continued concern about the turmoil in Iran. You have been watching the latest weekly CFD overview of the global financial markets.